Yo, what's up? This is me, the Millennial Investor 1914. Welcome back to my channel. I don't know when last time I made a video. I just had, just had a lot of things on my mind. I just want to come and talk about it. This investing journey has been an interesting feat. What I can say is that it's been trying, and so a lot of times when you're investing, it's nice to have a community around you to talk about things and to really stay focused. So what you find is that my last video it showed that my individual stock portfolio, my taxable account, had at its highest hit 140, 137, almost $140,000, and has fallen all the way down to 119,000, right? And so, yeah, it sucks. It really does. It really does sucks. It sucks because I was really hoping to, and I still have an opportunity, but to end the year close to 155,000, uh, to make that my goal. Because my goal is for my uh, taxable account to hit 250,000. Because when you look at a lot of videos, compounding, they say compounding starts when you hit your first 100,000, but when you account for inflation and you account for 2026, the true number is 250,000. From my research of videos and numbers and using Claude, Grok, and all of the learning language models, the true compounding really starts when you have a portfolio of 250,000 to about 350,000. Once your portfolio hits it's between that range, that sweet spot between 250,000 and 350,000. Even if you receive a 10% increase, the market gives you way more compared to what you're investing in your portfolio on a year basis alone. And really at 250,000, you really 50% halfway mark to $1 million in terms of time, right? The time it takes to for the compound to get a million, right? So 500,000 is not the halfway mark. 250,000 is, and so that's why I'm really down right now, because you see this number right here. You see that year to date, my portfolio was, man, it's tough. uh these are all my portfolio. All my portfolio, it had hit close to 183. Let's just say almost close to $184,000. That's with, it was like my taxable account, my Roth IRA, my regular IRA, and man, that pullback in July really hurt. In the July going into August, and even these August has been really hurting me. And so, a lot of days I just been just investing, putting my money into the market, and just really closing. Really been closing my computer because it's really painful. It really is. So, but what I really wanted to talk about is what I plan on doing going forward. So I plan on double down in this video. BTCI, my Bitcoin high dividend ETF, currently pays me roughly 330 $330 per month in money. What I plan on doing is I plan on selling. So what I was doing was I was investing $750 per month, and then I was also reinvesting in dividends. So let's just say $1,000 per month was going back into BTC up to buy shares, and I was with Grok and Claude and Gemini, I was able to forecast for me able to hit the payment of $550 per month coming from BTCI next year around May, right? But then I realized, like, man, I'm still gonna have to pay taxes on all that money. And yeah, it's cool to have an extra $550 per month coming into my account. But then, man, I still gonna have to pay taxes on all that, right? And so, what I plan on doing is this. This is what I plan on doing. If I can move this, yes, okay. All right, here is the screen. So my BTCI is roughly $16,730, and my other stocks, I have Lamb Research, AMD, Broadcom, KLEC, Fix, and VU, Eli Lilly, and Powell. So VU is invested into the S&P 500, and then the other stocks, that's five, six, seven. Other seven stocks are my seven individual stocks that I plan on just holding. What I plan on doing is, of this $16,000, I'm going to split $6,500. I'm going to put $1,700 into KLAC, which should put my position to 15,000. I'm going to add $2,000 more to VU, so I can round out VU to $15,000. Add $1,150 into Eli Lilly to round it out to a position over 10,000, and a $1,700 into Powell to run it back to $10,000, since it has dipped to under $10,000. So that's what my goal with that $6,000. So I know you could, like Cordero, that's $6,000. You still have $10,000 more to play with. With that $10,000, $10,150, I plan on adding TPL. I know you wanted, like, Cordero, why are you doing that? So I want to show you guys why I am adding TPL, which is an energy company. Very volatile. Definitely, you have to get in certain stocks at the right time, at the right moment. But when you look at the diversification of my portfolio, what you see is that my portfolio is 49%. Take out, if you take out just me investing to VU, the SP 500, invested up the best 500 companies, top 500 companies in the United States. With my stocks, I'm investing to roughly 50% technology, right? The 25% uncategorized will be the investment of BTCI. 18% is in industrials, 7.64% is healthcare, which is Eli Lilly, and then uh, the other, what I plan on doing, that put that 10% is going to be put into right here, is going to say energy, and that's going to be another, let's say we're going to round it up to 8.5%. The reason why is because of this. Uh, my tech stocks, my technology stocks are going to be my stocks right here, are going to be my stocks, going to be my rocket ship. It's going to help me rocket as I take advantage of this AI boom. But what I plan on also doing is that, if the big mega companies, the Apples, the Googles, the Metas, the Teslas of the world, the Nvidias, if they stop spending, which at some point they're going to stop spending, that means that all the money, the billions of dollars that they're shelling out to my AI plays, it, my AI plays may take a back seat, right? And so I need other rocket ships in my portfolio to help cushion the blow, but also help lead me to my goal. My first goal is for me to hit $250,000. My second goal is for me to retire with at least $750,000. I can't get to $750,000 until I hit $250,000. Right now, I'm at $120,000. Still have some ways to go. I'm investing I'm a lot per month, and so definitely trying to hit the goal. But I definitely need help with the market and help with certain stocks, and that's what I'm doing. So investing to TPL. TPL has a known history of high, high free cash flow, zero debt, also compounding heavily. Eli Lilly, healthcare, pharmaceutical giant, 30%, 33% free cash flow margin. Chef Kiss, right? Then you have Powell, which deal with the electrical currents and wiring. You have Comfort Systems, the build out and the air conditioning, the heating of the cooling of these technology companies, and also the build out of these technology companies. And so I'm investing to other different industries to help diversify, but also rocket ships along the way. And then lastly, I have my floor, which is the SP 500 VU, where again, I said a year ago, I mean, like a couple months ago, it was not even a thought. My VU position was was let's say 5,000. And I've been able to now to really shell out, and put a lot of money into my VU. And by the end of this year, my VU position should be 20,000. And moving forward, I'm going to be investing $1,250 to about $1,500 into VU per month, which comes out to roughly 15,000 or 15,000, and do a lump sum of 5,000 to get it to about $20,000. Just put into VU per year to create a buffer for my highly volatile tech stocks. Because since my tech stocks are pretty volatile, I need something that's going to be able to absorb uh, or the cushion of just the high volatility of my portfolio, right? And so that's where the VU comes in. Or if I wanted to, I would invest into the entire market, BTI. Okay. So that's what I plan on doing. That's the shocking truth. I plan on selling my BTCI that's paying me $330 per month, and I'm going to double down on my stocks, especially as we go into September. Typically, every year September, the market goes down some more. So I'm really just hedging against myself, because I'm already knowing that the market probably deal me uh, deal me another uh, loss. And so while I deal with those losses, I'm going to buy these stocks at its lowest, so that when the market finally shoots up and we go into a bull market, boom. I'm hopefully hoping that my portfolio ends the year off uh roughly I hope my portfolio ends the year off roughly around 135,000. If I can end the year off around 130,000 to 135,000 to 140,000, I will be excited. So that's my goal and plan. And hopefully my entire net worth of all my other stocks get me to back to around 185,000. Because man, having a net worth of only not only close to 200,000 was sweet. So make sure you like and subscribe to my channel. Holla at your boy. Give me likes, give me shares, spotlight, everything, and I appreciate it. Thank you. Bye.